Today I'm going to show you 4 stocks I'm keeping my eyes out to purchase this week. The first 2 I'm going to take a quick look at are in the semiconductor industry. And I know what probably some of you guys are saying. Jose, I already know you're going to talk about AMD and I already know you're going to talk about Nvidia. Well, let me just say, no, I'm not talking about those 2 companies. The 2 semiconductor industries that I'm hitting actually pay a dividend, right? The third company we're going to take a quick look at is a software company in the automobile industry. Unfortunately, this one has really hurt my portfolio right now, but I don't know. I believe the overall long-term growth in the automotive market right now, especially with smart vehicles, is still super strong. The final company we're going to take a quick look at is one in the cybersecurity market. Unfortunately, this one has recently kind of gotten hit by a hack, and a lot of negativity has been pushing the stock price down, which I believe might be giving me some attractive values. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. Taiwan Semiconductor is going to be the first company we're going to take a quick look at. First thing we can see, dividend yield of about 1.8%. And the other thing I want to show you is this pretty much has been dead money for the past year since December of 2020, right? We are now in 2022. The stock has barely moved anything. And for those not familiar with TSM, they are a company that produces chips, right? You have the big semiconductors that come to TSM and say, hey, I need you to make me these many chips. And right now they're working at pretty much full capacity, and I don't believe this is going to stop anytime soon. If we take a quick look at some of their latest numbers, they did share their kind of February 2022 numbers, and the first thing we can see is year over year they're still seeing an increase of 37.9%. So like I mentioned, this is a stock that has taken quite a beating, and if we take a quick look at fundamentals, looking at forward EV to EBITDA ratios, it's not looking completely overvalued in my eyes. And if we take a closer look at fundamentals, this is a company that has plenty of cash. They have plenty of cash flow from operations compared to long-term debt. So again, overall, the market that they're in, producing chips, is one that I believe will continue to grow as the overall demand for artificial intelligence, machine learning, automation, robotics, autonomous driving, and the list goes on and on. So this is one that I am enjoying right now. I mean, when we see articles like this where TSMC sees demand spike for auto chips thanks to Tesla, Nvidia, Qualcomm, and Intel, so we can see that demand is still there. The second company we're going to take a quick look at is one in the semiconductor industry as well, one that pays dividend. This is not a manufacturer, this is a designer, and this is going to be Qualcomm. I want to thank the Motley Fool for sponsoring this video, and keep listening for this great offer we have for the community. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with the Motley Fool to bring you a discount for one of my favorite services the Fool offers, the Motley Fool Stock Advisor. Go to fool.com/Jose to sign up and get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor has been a market-beating service. So what are you waiting for? Thanks again for the Motley Fool. Now on to today's points. Qualcomm, very similar compared to early 2021. The stock price has barely moved. This one also has a dividend yield of about 1.72%. And what really excites me about Qualcomm right now is they do make most of their revenue from handsets. And this is where the growth is coming. Their CEO has mentioned that they have created great chips for mobile devices. And with mobile devices, what do you need? You need something that is great with temperature. It's something that's great with power, overall power efficient, because you only have limited amount of batteries within a phone. Now, the same kind of concept that they've used on their phones, they're kind of bringing to other products. One of the products that they're kind of entering into is the automotive market, which is a very small portion of this company's revenue. Internet of Things is another one, but if they kind of can bring those same kind of concept and innovations that they've done on the phones into the automotive market, into the Internet of Things market, I do believe this is some strong potential growth. Here we can take a quick look at their most recent quarters. Revenue were up 30% and earnings per share were up 49%. So it is a profitable company. It is a company that pays dividend. And if we take a quick look again, looking at EV to EBITDA ratios, it is not looking overvalued right now. That doesn't mean stock prices can't go down, right? The market works in crazy ways, so stock prices can continue to go down. I do believe the risk of value valuation is a lot less right now. If we take a closer look at fundamentals, this is a company that does have a nice amount of debt, but they are positive in cash flow from operations, and they do have a nice amount of cash and short-term investments. This third company we're going to take a quick look at, like I mentioned, is one that has really hurt my portfolio in the short term of things, but I do believe the automotive market, maybe not this year, but in the long term of things, is still gonna grow, especially with the smart vehicles and the software needed within there. So we're gonna take a quick look at Cerence. This is one that we can see from it's down over 60% right now with a market cap of $1.4 billion. For those that are not familiar with Sorens, they kind of create software that goes in the infotainment of pretty much almost all vehicles. At least one out of every 2 new vehicles shipped right now comes with Cerence technology. So that is a huge market. Here we can see March 23rd, they announced that one of the luxury automobile industries in China selects Cerence to kind of work on their infotainment. Another one we can see Volkswagen and Cerence expand their strategic partnership. So Volkswagen Group is working with Cerence, and a lot of the other tier 1 companies continue to kind of increase their partnerships with them. If we take a quick look, again, EV to EBITDA, it doesn't show me that this company is overvalued right now. It's not saying it's undervalued, but at least it's not overvalued. So again, that risk valuation has pulled down. If we take a closer look at fundamentals, they do have some form of debt, but they are positive in cash flow from operations, and they do have some nice amount of cash and short-term investments. The other thing is, I like to look at who are using some of the kind of innovative technologies in the market right now, and Cerence uses some of NVIDIA software. And I believe just by using some of NVIDIA software, you're already becoming you're becoming a leader within the market. Here we can see strong partnerships and ecosystem. This is from NVIDIA's Investor Day. If we take a look at software, who is number 1? Sorens. So again, that kind of shows me that Sorens is at least a leader or at least one of the market leaders in this product. Again, I do believe the automotive industry is expected to grow. Here we can see NVIDIA believes that NVIDIA Drive, which is just the autonomous vehicle, is about a $300 billion market opportunity. So for Sorens, is also a multi-billion dollar opportunity. And we can see this is a company right now with a market cap of $1.4 billion. If we take a quick look, obviously the automobile industry continues to get hit. And this is one thing with Sorens right now. Sorens depends a lot on vehicles being shipped because they kind of license their products. So if vehicles are not being made, they're not getting any form of kind of licensing fees. And I don't think that's going to change anytime soon, especially if we look at articles like this where UK car production falls 41% on chip shortage. Vehicle factories still continue to kind of be down due to overall chip shortage. And this is happening globally, right? It's not just the United States thing. It's not a Europe thing. It's a global chip shortage in the automotive industry. So I do believe in the short term, I wouldn't expect much movement from Cerence, but I wouldn't mind increasing my position and kind of just waiting in the long term of things, where I do believe this will play out pretty good. All right, the final company we're going to take a quick look at is Okta. This is one that's dealing with identity authentication in kind of devices, kind of in the cybersecurity play. Right now, we can see this is another stock that since I want to say May of 2020, these are prices right now are actually cheaper than mid of 2020. And that again is showing me that, hey, there might be some great valuation play at the moment. One of the biggest reasons is Okta has been hit with a hack, and we can see Okta confirms January breach after hackers published screenshots of its internal networks. So you might be like, Jose, you're kind of talking about a cybersecurity company, and this cybersecurity company just got hit with a hack. Definitely one I would step away from. And obviously that makes perfect sense. If you're thinking that makes 100% perfect sense. But the real question is, we've seen a lot of these hacks from Laxis, I believe it's their hacking name. They have hacked NVIDIA and some of these other players, and not much has been stolen from some of these other players. So for me, for Okta, it might be the same thing. So right now we're still in the dark here. There's still too much uncertainty. So for me, Okta is on the bottom of this list. I still haven't decided if I'm gonna go with it. But depending on the next few days, what we hear from Okta and how much has been stolen and how much we should worry about would determine if I want to buy in or not. But I do believe the negativity right now is kind of providing a great valuation if things are not as bad as they seem. If we take a quick look right now, price to sales ratio for Okta, forward price to sales ratio sitting around 12, right? Normally I like to see software companies near the 10 or lower valuation. So again, not showing overvalue, showing that, hey, valuation risk has kind of decreased a little bit. If we take a quick look at trailing 12 months cash, they have plenty of cash. They are positive in cash flow from operations, but they do have a nice amount of debt, but that is because they are making acquisitions. If we take a quick look at their most recent quarter, they grew 39%. If we take a quick look at them with organic growth, not counting any acquisitions, and for the upcoming year, they believe they will grow around 37 to 38%. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.